Testing and optimizing trading algorithms is the process of assessing the performance and efficiency of automated trading systems in the financial markets. Effectiveness and efficiency are crucial in trading algorithms as they directly impact the profitability and success of trades. Effectiveness ensures that the algorithm accurately identifies opportunities and makes sound decisions, while efficiency enables quick execution and minimal resource usage. Both aspects are essential for maximizing returns and minimizing risks in the volatile world of trading. When evaluating algorithm effectiveness in natural language processing, key metrics include accuracy, precision, recall, F1 score, and perplexity. Understanding the impact of testing on algorithm performance is crucial for optimizing efficiency and accuracy. Testing helps identify potential weaknesses, areas for improvement, and performance bottlenecks in algorithms. One method for testing trading algorithms is backtesting, which involves running the algorithm against historical market data to evaluate its performance. Backtesting is a crucial tool for optimizing algorithms by analyzing historical data to evaluate the performance of trading strategies. It helps in identifying patterns, refining rules, and improving the accuracy of predictions. Implementing forward testing for real-time performance evaluation involves executing a trading strategy using current market data to assess its effectiveness in real time. This approach allows traders to make timely adjustments and decisions based on live market conditions, leading to more accurate performance evaluation and potential improvements in trading strategies. Stress testing is a valuable tool for assessing the robustness of algorithms. By subjecting them to extreme conditions and large volumes of data, we can gain insight into their performance under duress. This allows us to identify weaknesses and make necessary improvements to ensure the algorithm's reliability in real-world scenarios.